the more we can incentivize money to move, the more likely we're going to create more jobs and create more revenue. And so the deferred sales trust, first of all, is not a 1031. It's a separate tax law. It has not even been mentioned that we know of on 453 installment sales for any like decades. Like it's just not even mentioned. It's just an installment sale.
How is the current kind of tax landscapes and policy and the regulatory environment around this? Is it changing? Is it evolving? Is this thing locked in? I don't think anything is locked in, right? But is there any threats or concerns around the future of this? Or what are you paying attention to as somebody who's an expert in this space, knowing it's such a critical component of your business?
Absolutely. We'll start with the legal track record and then talk kind of the current what's going on, right? So legally, this thing goes back 27 years, thousands of closes, billions and billions and billions assets closed using this, and over 25 no change, no finding IRS audits. So we're batting 1,000 so far.
Wow.
Really a perfect track record, very important. We also offer lifetime audit defense. Most of those audits were in California. One of the biggest deals is over $100 million deal in California, audited, no change, no finding. So we're batting 1,000 perfection so far there. That being said, they could change something, right? You never know when they're going to change, if they could change something. Now, this tax law, IRC 453, known as an installment sale, which again, we know, CPAs know, that goes back to like the 1920s and 30s. That's a very tried and true tax law. We believe it's not going to change, partly because of what happened in the Great Depression. And when these banks seized up, you had basically the government saying, like, we need to incentivize Matt or whoever is the seller to do a deal to move commerce, to move money, right? To expand. And the only way to really do that is to help them be able to defer tax for a period of time and earn interest on the money. And so it actually incentivizes, I think, the laws to stay in place. That being said, they looked at the 1031 exchange, and it's kind of been on the chopping block, if you would, for 5 or 10 years. It's never, ever, been, defeated yet. It's still there. There's a big lobbyist group that does the 1031 exchange. Yep. Part of why that is the macroeconomics of studying that the more we can incentivize money to move, the more likely we're going to create more jobs and create more revenue. And so the deferred sales trust, first of all, is not a 1031. It's a separate tax law. It has not even been mentioned that we know of on 453 installment sales for any like decades. Like it's just not even mentioned. It's just an installment sale, right? So I think that's the first thing. So we're pretty confident that it's going to stay that way. If they do make a change, it would be grandfathered in. Anyone behind would make a change. But again, it's not even on the radar as far as we know. And the 1031 exchange is still kind of on the radar. But by the way, that got restricted to just investment real estate. It used to be like, airplanes or even businesses. Now it's just investment real estate with the Trump, tax, thing a couple years back. So we hoping the 1031 stays around because we still love the 1031 when it makes sense, but the deferred sales trust is even clearer and not even on the radar.